afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 1st of September, and our guest today is Kelvin Wong, Senior Market Analyst at Oanda. Kelvin, great to have you in the show as always.
It's my pleasure, Brian, and happy Friday.
Now, happy Friday. Now, before we get your insights, we're going to take a look at how the markets across the region have performed. We're going to start with the Straits Times Index, the SGX. Sorry, and I don't have the data for that, but we'll go down to the Bursa Malaysia, which is up 0.54%, which was closed yesterday. Shanghai is up 0.22%. The ASX All Ordinaries is down 0.3%. The Nikkei is down 0.61%. The Hang Seng is closed due to typhoon. And rounding up the numbers, we've got the Kospi, which is up 0.19%. Kelvin, your view on market performance in the first half of the day?
Yes, precisely. Because if you look at today, definitely it's the first start of the month for September. So a bit of a lower liquidity coming into the markets. Especially later we discuss about there's one important data out later during the US session, which is the US non-farm payroll. We can talk about that later. But one thing interesting to highlight today in the Asia session will be the China stock market. So if you look at the China stock market over here, is that today is actually up positive for the first start of the new month. So one of the reasons about this current short-term positive performance of the China stock market is due to the fact there's two data to actually, or two events to actually take note of. Is firstly, we start to see much more, we call it policy easing on the property developers or the property sector in China, which actually one of the key catalysts actually lead to China in this current economic doldrums in the last 3 months. So the China top policymakers has just made an announcement to actually reduce the down payment for first-time home buyers to 20%. And much more significantly is to reduce the down payment of second-time home buyers to 30%. So that's a pretty significant reduction from the previous, we call it a watermark of close to 80%. So previously, the second-time home buyers who wish to buy a home in China need to pay as much as close to 80% of the value of their home. So I think that could be one of the drivers to actually drive up the current short-term positive moments in China. Then one thing I want to talk about over here, secondly, is the fact that we start to see a bit of turnaround in China economic data, which is the leading economic data, which is the manufacturing PMI. So you recall that at the start of the week, we have a much better government compiled MBS manufacturing PMI data for August in China. So the data actually improved to 49.7. That's above a market expectation of 49.4. So that's 3 consecutive months of improvement. Yes, it's still in contractionary mode below 50, but this improvement has started to show a bit of turnaround in the manufacturing manufacturing sector in China. But what remarkably stood out this morning is over here is that the privately compiled Caixin manufacturing PMI for the month of August actually spiked up to expansionary mode to 51. So that's actually above expectation as well. So market actually expecting a rate of close to 49.3. Okay, so that was actually a big jump to 51 versus expectation of 49.3, and that's the strongest pace of expansion since February if you look into the Caixin manufacturing PMI data. So definitely a bit of signs of a bit of turnaround in the last 3 months of economic downturns in China. But whether we need to a more substantial recovery, I think is still pretty much too early to say at this point in time.
Now, Kelvin, then on a different note, let's take a look at what markets are looking at. Today, it's basically the non-farm payroll numbers, which should be out later tonight.
Yes.
What is your view on this, and what is the market, and how is this going to impact foreign exchange markets in particular?
Yes, precisely. So let's take a look at, before I jump into the non-farm payrolls data, usually on Wednesday, there will be a prelude to this non-farm payroll data, which is this privately compiled ADP employment change. So that's something like a teaser for the government release non-farm payroll, which is today. So the ADP employment change, the number came in relatively lackluster, below expectation. So if you look at the current consensus of the non-farm payroll data, market is expecting 170K jobs added for the month of August. So that's actually below 187 recorded in July. So I believe that given the fact that the ADP numbers is came rather lackluster, a second round or what I call a trickle down lackluster number is also being expected on the non-farm payroll. So what you see, you so far the current performance of the FX market, we talk about the dollar index, is actually being we call it yo-yo between gains and losses since the start of Monday. So at this point in time, the dollar index is actually down slightly at negative 0.5%. But one thing I want to be aware of is the euro dollar. So very interestingly, the euro dollar is now being sandwiched by two key technical levels. One is at this 1.096, which is the 50-day moving average that is acting as a resistance since the breakdown on 11th of August, and as well as the 1.08 support level. So that is the close to the 200-day moving average that is was tested on last Friday, but managed to survive the onslaught of the dollar strength. So these are the two levels we're watching pretty much closely ahead of the Northern payroll, 1.09 and 1.08 on the euro dollar.
Kelvin, thank you very much for your insights. Thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.